All right, guys, good morning. If it's 9 a.m., it's the morning note. Good morning, everyone. Actually, it's 9:05 Eastern Standard Time. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me today, this morning, and every morning, 9 a.m. Eastern Standard Time, here on the G.A.R Capital YouTube channel. Bottom right-hand corner of your screen, little black logo. Click on that, turn notifications, subscribe to our channel. Make sure to hit that like button if you do like these videos. Well, we got some news in today. Let's rock and roll. Let's do it like we did last time, where we just have one big chart and we'll go through it together, each one. I do love my home computer a lot more than my office one, that's for sure. Dow Futures down 208 points, NASDAQ down about 1.33%, S&P down about 1% this morning. Russell 2000 futures down about 1%. Crude oil continues to sink. We talked about that yesterday, down about 0.5%. Gasoline futures do turn green, $2.79 a gallon. Gold futures down about 1.37%, 1782 an ounce. 1955 for silver futures, 2.82. The reason why commodities are down is because it's the good old dollar. Let's go ahead and start with the dollar. Dollar is breaking out of this trend line to the downside. We did break out of that before, came back down, and we'll see where we go here. If we start breaking above 107, we expect commodities to continue to falter. We expect stocks to going to fall as well, at least in the near term. So that's your dollar index. We're going to keep an eye on that today. Let's take a look at yields after this jobs report. Just to kind of give you the heads up on the jobs report, we did tweet it out this morning. We did posts on Instagram about it. A lot of news. Let's go ahead and see. Here we go. Non-farm payroll report for July, 528,000 versus 372,000. That is double, more than double the estimate of 250,000. Unemployment rate in July, 3.5%. Versus 3.6%. The previous was 3.6%. How about this? Non-farm payrolls. We had that. There was one here from Lizanne Saunders. Now we're above pre-pandemic levels. So again, a swing and miss to the upside for jobs. July non-farm payrolls, 528,000. Up 250,000 estimate. We talked about that. 398,000 in the prior month. That was revised higher. So last NFP was 372. Now it's 398. So there you go. Here's the reason why stocks are down. Now we're going to get a rate increase of 75 basis points in September. We were kind of pricing in a 50, but now we're getting 75. There's not going to be a pivot when you have employment this strong, because now we have to lower labor costs, guys. We have to lower that. So again, it's more inflationary pressure as jobs continue to grow. Bad news is good news. Good news is bad news. You can see it however you want. But again, yields are going higher because of the understanding that the Federal Reserve will increase rates moving forward. So again, at least in the short term in September, 75 basis points. That would be 3 in a row, most ever in the Federal Reserve history. Let's go and take a look at let's take a look here on TNX, which is a 10-year yield. And again, we've talked about this. Maybe we could retest this neckline, maybe retest that right shoulder in that general area above 3%. I'm still long government bonds, obviously. But again, we will see as we continue, because we have CPI and PPI next week, which is consumer product index, and PPI, which is the producer price index, consumer price index, excuse me. Let's go ahead and add the volatility index here. We talked about this yesterday, and again, bouncing off that trend line, kind of the same deal. If we bring this up on the 4-hour chart, you could see nice trend line, bounced it pretty nicely. So maybe some weakness in the short term. I mean, we've run up so fast, so quickly to the upside. Let's go and take a look at S&P futures again for my SPY traders. You could take a look at 40.89, so that's around 407 on the SPY. We'll take a look at that. That seems to be support. We have tested that a couple of times and have bounced it, including overnight on Wednesday with that pop, kind of just consolidation on Thursday, and then the drop on non-farm payroll. And the reason the stock market is not liking this is because rates will increase. So the Fed pivot is kind of thrown out the window. The good news is that maybe the recession fears aren't as bad as people have expected, even though the actual definition of a recession has been put into place. With that being said, It's a weird one because here's a very interesting stat, and this one really took me aback. 388,000 average job growth in the past 4 months. Only time in history job growth has averaged 300,000 with two consecutive quarters of negative GDP. And remember, that's advanced GDP. That's not final GDP. That could be revised. If there was ever a time to define this time is different, I mean, that's pretty much nailing it on the head. It's just a different time. It's very hard to say. Again, it's hard to have a recession when jobs are plentiful because that's the number one source of income for a majority of people, if not all of people, is you have a job, you get paid for it, and then you're going to spend, which causes more hiring and causes more expansion. That's why the jobs report is so important. I think the market was just pricing in again the Fed easing, Fed rate cuts possibly again, but the job numbers continue to grow and continue to stay strong. The second thing now we have to look at again, like I said, is the CPI and PPI. So again, that's next Wednesday. We'll keep an eye on that, but right now your support on S&P futures is around 40.89. Keeping going here, we'll take a look at euro dollar. That's down about 91 pips, 101.57. Dollar yen is up 134.78. Bitcoin futures are up 2.34%, 22,980, outperforming the Nasdaq. Ethereum up 5.5% at 1678. Copper is up $3.50, even though with the dollar being strong. So remember, copper is kind of our recessionary kind of canary in the coal mine, let's just say, because if copper prices continue to fall, that means there's not much construction. So again, usually like in China and other developed nations. So again, the dollar being higher, nearly up 1% today. We'll go and bring up that dollar again, and you could see here just continuing to rack higher as S&P and futures kind of stabilize around 4107. Let's see if 4100 breaks. If we break 4089, then I could see us getting down to 4075, that 200 day on the 1 hour. As of right now, is there anything that I want to do different? Is there anything I want to jump into? Not exactly. I do have some calls for next week, so I have no problem holding those, and we'll see what we get from there. Let's answer some questions. Shyam is asking, will stocks keep sliding today? That's very difficult to predict. Again, I'll just give you my opinion. So 4089 seems to be that support. I think we'll retest that, possibly get to around 4083, and then we could probably get under it for a bounce. Morning, boss. I understand how bad GDP could have signaled a pivot and be good news, but I'm not understanding why stocks don't like strong numbers. Stocks don't like strong jobs numbers because it adds more wage pressure on businesses. Again, if you're hiring new people, you tend to pay them more than existing ones. There was an interesting stat as well about that I posted regarding uh, people that switch jobs are getting paid more than people who are staying in their current jobs. And again, we're still looking for that Fed cut, Fed pause of some kind because they control the money supply. If they keep tightening, again, that's not going to be great for risk assets. Again, maybe great for savers, sure, but and great for the dollar, but not great for stocks that we are looking at every day, growth stocks and such. That's really the only caveat. I know it's a little kind of backwards that we have how do we call this? We have bad news is good news is bad news. It's just the way it is. And again, that's short term. It doesn't mean that we're going to get down to 3,000 tomorrow. No, it just means that hey, the market did not like the good jobs number because it'll be a hawkish Fed, and that's what we're seeing with yields. Yields are going higher, the dollar's going higher, and we know how important the dollar is. William Wolf says, "Good morning. Time for puts on QQQ short term." Let's go and take a look at that. Let's see if we break 318.13, Wolf. If we do, then I like it to 312. So again, my eye is right on 318.13. Why is it bad employment goes down? Because of fear of stagflation? The issue with lower unemployment is just meaning that more people are working. That means it's going to be harder to find people to, because if everyone's working, it's going to be harder to find good people to fill those jobs. That means wages go up, inflation goes up, at least short term. And inflation goes higher or continues to stay high, we're going to continue to hike rates. Pretty much basic it. Bad NFP. Well, it was a good NFP. NFP, I guess, is a depending on perspective. If you're somebody that wants the economy to do well, you're celebrating. If you're someone that wants to make money because you're a capitalist like me and you're trying to make money in the market with stocks, then not the best thing today. But I still think it's good news. Is it great news? Yeah, economic wise, is it the good news for people who own calls right now? Not really. Again, this is very short term. We got to see how we open. Again, when we see the cash open and liquidity comes in and buyers and sellers come in, we'll start seeing what exactly we expect. But 75 basis points in September, that would be three in a row. Three in a row meetings that we had 75 basis point hikes. That's never happened. Maybe the Fed is going to tighten until they break something. How do you feel about Netflix calls today? That's the ones I have. Still the same. Nothing has really changed here. We have a gap to fill right around 221. Let's see if we hold above 222 again. Still holding that pattern. I mean, we've seen this in terms of growth names. The high betas have been doing very well. So if we go ahead and just start adding some points, we'll just do it by candles, and we'll see if we have any kind of trend line. So again, kind of a small trend line, kind of broken down. If we go ahead and actually do it by the wicks, which would be the lowest wick here, and we'll connect it to this wick here. Let me see if I could do this again. Not the best setup here, but we're just going to go to wick, and I'll extend it to the right. Again, I guess if we want to use those two trend lines to kind of hold it up, it is holding up. It is flagging right now. If Netflix breaks 222, then yeah, we're going to get lower on Netflix, and we'd have to cut bait on those calls. But as of right now, I am holding. Let's see what happens when we open. You're welcome, Wolf, and you're welcome, William. Yeah, I do have Netflix calls. We did close our AMD calls, so cool. For our members, so we did catch a little something. Micron for masterclass, we took that as well. Well done. So again, well done, team. I mean, it was been a pretty solid week. Now we had NFP, it's behind us. Now we need to look forward to CPI and PPI. Let's see what we get moving forward. But as of right now, it seems to be we're stabilizing right around 4110. That's around a 50 point move, a 50 handle move on S&P. End of the world. I mean, we have tested these levels before. Can you see a triple bottom and triple top, I guess, if you want to call it? So again, call it for what it is. But again, if it's just pure price action, it looks like we're just going to retest 4089. Let's see if we hold there. That's all we can go here. Volatility index, again, just holding that trend line. Dollar breaking out, not the best thing in the world, but hitting some short-term near resistance. So we got one here. Let's put an alert there. If we get break above that, then we could start seeing if we break above 106.97. So that's two alerts that I have, and then you have one more at 107.38. Again, this dollar dissension has been broken short term, but we had that already, and then we fell. So again, this could be that resistance that holds, and looks like we're going to break it anyway. So let's go ahead and remove that. We'll add the 106.97 and see if that resistance holds. It's always numbers. It's always scenarios. Every day is different. So let's see what today brings. Have a great rest of your weekend, guys. No aftermarket recaps on Fridays. Enjoy it. I will catch you guys next week for the aftermarket, for the morning note. Feels good to actually have my voice back. Feels good to get away from these allergies. Back and ready to rock. CPI next Wednesday. Get that rest because you're going to need it. It's going to be a big week. Have a great rest of your day. Cheers. See you soon.